Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about HIMS and HERS. This is a very interesting company. It's a telemedicine company and it's a really exciting company, so I'm going to just kind of jump right in. We're going to talk about what the company does, some of the good metrics that the company is putting out, the fact that it's raised its guidance, then we're going to talk about its valuation. So let's just jump right in, right? So HIMS and HERS came to the public markets via a SPAC. So if you follow this space, you'll have seen that so many of the SPACs from last year or even from earlier this year have just basically all just plummeted down. In the graph here, I've showed Skills, HIMS and HERS, and Open Door Technologies. But you can just, if you follow the space, you could have picked out any SPAC. So they're all down like significantly. And I didn't even pick the highs here in the graph. If you look at the highs, these stocks have just been totally obliterated. So the market is totally undiscerning, right? Anytime that the market is not discerning, if you're willing to do a tiny bit more work, sometimes you can be quite lucky. And you don't even need to, if you pick out 5 names that are totally battered and you just pick up equally weighted positions, sometimes one of them works out quite well and it just drags the whole portfolio forward, pulls the whole portfolio forward. So it's a business I'm quite excited about. So let's just jump right in. So you can see here, the company put out some guidance and they raised their guidance, and you can see the company is just growing like flat year over year, 69-70%. So it's just a bang. It's just growing at a really fast rate. And what I think is exciting is that they're making a move here to go beyond just selling males, beyond hair loss products and erectile dysfunction products. So, not just those two categories, they're trying to expand into new categories. Behavioral health is a big one. Dermatological products is the big one that, every other company in telemedicine is trying to go after. So they are doing the right things. I don't put in the article right here, but I'll just give you a heads up. This is a stock that's management holds a significant amount. So by my rough estimates, I think 75% of the stock, the HIMS and HERS, is held by either the private equity funds or the guys that did the SPAC, or management itself, or the founder. It's like everyone basically that has an interest in HIMS and HERS succeeding holds a stock, and the inside of the stock ownership is very, very high here. So if you were to take a position here, I'm not saying you do, but if you were to take a position here, you can be sure that every time the stock goes down 5-10%, that they're hurting as much as you are. So there's a strong incentive, strong alignment by insiders here. So one of the things that I'm quite interested here is you can see the cohort here. So the company was founded in 2018, and 3 years after the first cohort of customers came on board, there's still 88% retention. And what's interesting is that the cumulative amount spent by the first cohort is, let me see the number here, is 383. So 383 over time, over the 3 years, the first cohort has spent $383. They've spent on HIMS and HERS, and the new cohort that they've just come out in the first 12 months, they spent $363. So you can see that as new cohorts come across, they're spending more and more on HIMS and HERS as they get more familiar with the platform. And this is quite this is a beautiful graph. If you look just as a different case study, if you look at Netflix, when the Netflix gets more and more subscribers on board, you can see that they're able to sell to the new subscribers at a higher price point. And this is something very similar here. So new customers are coming on board and they're spending more and more on HIMS and HERS. So overall here, it's quite exciting, right? So another thing that I wanted to point out is that the subscriptions are increasing. The amount of subscriptions made towards HIMS and HERS, pardon me, towards HIMS and HERS is increasing quite rapidly. So you can see that I don't have the figure on the graph right here, but I've written in the text that the year-over-year subscription rates went to 59% compared to 79% in Q1 of in last quarter. So there is a slight dip, ever so slightly, in the subscriptions increases year over year. However, if you remember, in Q2 of last year, everyone was at home, so I think there was a bit of an abnormal period where people had a lot of extra times and they could visit pharmacies, etc. So I think that's an abnormal quarter, but all in all, you can see that the customers are spending subscribing and using more and more of the products over time. You can see that there's just a very nice increase in terms of how many subscriptions are made throughout each quarter. So altogether, you can see a very large number of customers spending on HIMS and HERS. Management does talk about the fact that for Q3, average order number may dip ever so slightly, but it's ever so slightly. So rather than being the average order about $73 coming to approximately $71, it's not a big thing, but this is because of the new acquisitions that they're making right now. So these acquisitions they're kind of younger businesses, so they don't have as much pricing power right now. Management believes, don't know if you want to take it or not, management believes that they're a few years behind what HIMS and HERS is doing right now, but that in a few years' time, that the two new acquisitions, Apostrophe and Honest Health, will be able to raise the prices so that they'll be able to move the average order higher for HIMS and HERS as a total. What I find quite interesting is that gross margins here are just beautiful. You can see that they've been trending higher over time, and they've been typically around the mid-70 range. However, Q2 that they reported a few weeks ago was actually 78% gross margin. So it's very nice. You're seeing that operating leverage works out quite nicely. And what I find quite interesting is that they're not burning a lot of it on EBITDA. So I know EBITDA is quite a heavily adjusted number, but if you think about it, for them to be growing at a run rate, what did I put here? The run rate I think is approximately, so if you look to Q4 of this year, I suspect that HIMS and HERS is on a run rate of 300 million, and this quarter they just spent approximately 15 million of EBITDA. So they're not spending that much, and I don't think it's going to be very, very long, maybe towards the back end of 2022 before this company becomes profitable. And once it becomes profitable, this is just it's going to be a very nice business altogether. So by my estimates, if we say, okay, we take management's guidance for this year, they are going to put out 255 million in revenues. So if you say, okay, this year they're growing at 71%, let's say that they decelerate. So next year they only grow at 45%. That implies that they're going to they're going to reach 370 million in revenues next year. So if you think about it, all in with all the stock-based compensation, all the diluted shares, and all the options and warrants, they got 225 million shares all outstanding. So that means the market cap on a fully diluted basis is 1.6 billion. Okay, so 1.6 billion, and I estimate that by next year, if they grow at 45%, which I think is quite achievable, that means that they're going to print out 370 million in revenues. That means the stock trades for just 4 times next year's sales. I don't think this is too expensive. 4 times sales for next year is for a company that has gross margins of mid to high 70s. I think it's it's very, very nice. There are a few things that you could fault it. You could say, oh yeah, at the moment, most of their products are coming from erectile dysfunction and hair loss products that are targeted at males. They may not be successful with their new categories to go towards females. Yeah, that's the point. There's also the question mark that you could say, oh, I can get those same products elsewhere. And what HIMS and HERS is saying, okay, that's not our customer. Our customer is coming here for a specialized, curated offering to take care of their health products. People that are concerned about their health, their weight, whatever, we're going to be offering them a personalized touch where you talk to a healthcare provider or via video or telephone or whatever, and it's a curated healthcare system. So it's not just getting products cheaply. So that's the narrative. I don't know, you can take it or leave it, it's up to you. I just think it's quite exciting overall. So this is not a stock that I own right now. It is definitely on my watch list. If you want to find out what stocks I do own, let me know. You can look me up on Deep Value Returns on Seeking Alpha. And, I'm not going to replace you. I'm just a source of ideas. If you want to find out like 1 or 2 names, oh, this is interesting, to add to your own portfolio, come over to Deep Value Returns. You're welcome to do a totally free trial, to see if it suits you. And, if you like it, you stick around, chat with our investment community that's growing in the chat room. And if you find that it's not for you, unsubscribe anytime before 14 days, and you're not going to get charged anything at all. So anyway, thank you for watching, and I'm going to see